Today we are covering adjustments to income, also known as above-the-line deductions, which are found on Schedule 1 of the Form 1040. The entire purpose of these deductions is to lower a taxpayer's adjusted gross income, or AGI. On the exam, you must treat AGI as the most important number on a tax return because it single-handedly controls eligibility for a multitude of credits and other deductions. A lower AGI is always better. The exam will test your ability to distinguish these adjustments from itemized deductions. Remember, the taxpayer can claim these adjustments even if they take the standard deduction. Let's look at how this appears on the exam. A common question will test the educator expense deduction. The exam will expect you to know the specific limit, which is $300 per eligible educator. They might give you a scenario where a teacher spent $500 on classroom supplies. The trap is choosing the $500 amount. The correct answer is the maximum allowed deduction of $300. Another heavily tested area is the deduction for 1/2 of self-employment taxes. A classic exam question will provide a sole proprietor's net business income, say $100,000. First, you calculate the amount subject to self-employment tax, which is 92.35% of the net income. Then, you calculate the 15.3% tax on that amount. The resulting number, which is over $14,000, will be one of the wrong answer choices. The correct adjustment to income is only 1/2 of the calculated self-employment tax. They are testing your ability to complete all the steps. Similarly, the self-employed health insurance deduction has a critical limitation the exam loves to exploit. The deduction cannot exceed the net profit of the business. If a business owner paid $10,000 in health insurance premiums but only had a net profit of $8,000, the maximum deduction is limited to that $8,000. The full $10,000 premium amount will be a distractor answer. For retirement contributions, the deductibility of a traditional IRA contribution is a frequent topic. The exam will present a scenario where a taxpayer has a high AGI and is also an active participant in an employer's retirement plan, like a 401k. In this case, their ability to deduct a traditional IRA contribution is phased out. The trap is assuming all IRA contributions are deductible. You must check for active participant status and AGI levels. Student loan interest is another key adjustment, and the exam will test your knowledge of the maximum deduction, which is $2,500 per return, not per person. This amount is also subject to AGI phase-outs. To remember these key adjustments, just think that even smart students hate saving for retirement. This stands for educator expenses, self-employment tax, student loan interest, health savings accounts, self-employed health insurance, and retirement plan contributions like IRAs and SEPs. Mastering these specific rules is crucial for lowering AGI and passing your exam.